Hi, hey guys, hey. Thank you for joining me today. Okay, give it a moment before we let other people join this webinar. Give me a moment, let me share my screen. Okay. Let me get to this. Give me a moment. Okay, guys. Thank you for joining me today. Okay, today, welcome to another Vantage webinar where we will be having a very conducive learning environment. Today, we will be talking about the advanced stochastic oscillator strategies. Wait, let me adjust this. Okay. So, before we start, I will have a disclaimer. I do apologize for it, but it's a disclaimer as usual. This webinar is purely educational, and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. Okay. Let me introduce our analysts. First, we have Desmond Leong. He is our chief trader. Next, we have Cassandra Ng. She is our prop trader. Next, it's me. My name is Chen Yongjing, and I'm the trade analyst for the company. Well, for our company, we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, so today, what can we expect for today's session? I will be teaching you guys how to implement the stochastic oscillator with your trading charts. We have quite a few topics today. We have 4 topics: best settings, secret strategies, and identifying divergences. Okay, what is a stochastic oscillator? It looks very similar to the RSI. It's this indicator below. Okay, the stochastic oscillator is actually another technical indicator that helps traders determine where the trend might be ending. So we have the usual oversold, overbought. Okay, I will move on to a charts later on where we will see how we can implement it. Okay, what are the best settings to use for the stochastic oscillator? Let's jump right in. The usual ones are 80 and 20. Well, the stochastic oscillator technical indicator tells us when the market is overbought or oversold. The stochastic is scaled from 0 to 100. When the stochastic lines are above 80, so we normally have a line, the stochastic lines, it goes up, goes above 80, then it means the market is overbought. But when the lines go below, fluctuate, goes below 20, it's oversold. Okay, that is just the very basics. Well, you can actually set to 70 and 32, but the most commonly used one is 80 and 20. Okay, many Forex traders actually use the stochastic in different ways. The main purpose of the indicator is to show us where the market conditions could be possibly overbought or oversold. But keep in mind that the stochastic can remain above 80 for a long period of time. So it can just hover there, you can continue for quite a while. Or it can also remain below for quite a while too. So do not just, only use the stochastic as your signal to buy or sell. So do not just when the stochastic oscillator goes up, you sell, or it goes down, you buy. If it's that simple, everyone would be millionaires. Okay, do not be blind when you are doing that. Okay, as a rule of the thumb, when we usually buy when the market oversold, sell when it's overbought. Okay, let us move on. Secret strategies the institutions use. Okay, how do they use stochastics? They use stochastic modeling, which allows the financial institutions to include uncertainties in their estimates. So they account for situations where their outcomes may not be 100% known. For an example, a bank may be interested in analyzing how a portfolio performs during a volatile and uncertain market. So it can be like a quick analysis thing. They create a stochastic model, which involves a set of equations with inputs that represent uncertainties over time. Therefore, stochastic models will produce different results every time the model is run because of their different set of equations and inputs. So moving on, how do we identify divergences? So we have the higher highs, higher lows, the typical market order flow. Also known, short form, higher, low. And we have the opposite, lower, high. So normally we normally use this there is a concept, there is a trading strategy called smart money concepts. Have you guys heard about it before? Do let me know in the chat. Okay, do let me know. Smart money concepts. If you guys use that, do let me know too. Smart money concepts actually is quite commonly used nowadays. You can actually learn it from YouTube, and they implement the higher low, lower high, this kind of stuff. Give me a moment. Okay, somebody raised their hand. If you have a question, do let me know in chat. I will try my best to answer you. Okay, let's move on. Okay. The higher highs are also called peaks. But I'm not sure that you guys actually use that word peaks. A lot of people just use it. Higher highs, higher lows. It's easier to say. And those lows are called troughs. Wait, let me type it out again. Troughs. Troughs. But it's easier to just use the word higher lows or HL. Okay, if you have a question, do let me know in chat, okay? I will try my best to answer you. Okay. When the market is making these wave patterns, the up, down, the stochastic oscillator is also making the same movements. So you can see the market goes up, this also goes up. If the market goes down, we can also see downward movements. But how do we implement the stochastic peaks and troughs to match the 80 and the 20 level? So what we can do is we can use stochastic divergence. Stochastic Divergence. What does stochastic divergence mean? Well, it gives us an early indication as to when the markets might be turning. So it is very reliable when used correctly, but it is not 100% accurate, of course. So what is an early indication? As you can see, the market is moving in a downtrend. But with the stochastic divergence, we are able to see that it's moving bullish. We are moving bullish upwards. So we can use this as an early indicator for the upwards market movement. It's the opposite. So as you see here, market is moving down. The stochastic divergence is pointing upwards. So we can use that as a possible early indicator. So please do not just solely rely on these two. As I mentioned, it is not 100% accurate. Also, please implement other confluences such as your Fibonacci lines, your smart money concepts, a Wyckoff, or trend lines, any kinds of other confirmations before you enter a trade. Do not just rely on only one indicator to enter a trade. Okay, let's move on to the charts. We can move on. Okay, just to let you guys know, before we continue on to TradingView, we can actually look at how do we get this webinar. You can check under education on vantagemarkets.com, education and educational webinars. It's under popular, it's listed as popular. You click on it and you can see the upcoming sessions, upcoming webinars. Okay, let's move on. Yes, you heard about it. Yes, smart money concepts. Okay, let me reconnect back. So as I was mentioning earlier, we can set the settings. Okay, firstly, let me clear all this out. How do I get the stochastic indicator? First, we go to TradingView. I'm sure everybody already has that. And then we move on. We click on indicators and you type in stochastic. Okay, stochastic. We can set this up together if you guys have not set it up. Okay, once you click on stochastic, it should appear right here. So you can click on it, you can double click on it. We have the upper band, follow my settings, upper band, and the lower band. So you can have the level. You can have the level of 80. Okay, I can't seem to draw on that. 80 and 20. So as you guys notice, let me look on the hourly. Okay, so when the stochastic indicator bounces up, prices also move up. Same thing. But right now, on the hourly charts, on the euro dollar, price is currently overbought at this area. But remember, always have at some kind of confluence. What do I mean by that? So when you see let's say for example right now, price is overbought. Always remember to look to the left side of the chart to see you must have a reason. Why did price went to the area? And then it started to have an oversold signal on the stochastic. Why? we always must have some kind of reasoning. So if you look to the left right here, what's this area? This is on the hourly chart. Okay, some of you guys might want to draw a box for this block. It might be possible that you guys are looking at that. Let me close the Ichimoku. Okay. It might be possible that you guys can draw that. So price went up, tapped an order block or whatever kind of block you guys have a name for before it had some kind of reaction. Okay, so for smart money concepts, if you guys are interested, I can implement it into this chart live. Okay, so what we have here, if I was using smart money concepts, I'm adding it together with the divergence. We must have multiple form of confluences before we enter a trade. So let's say, for me personally, I'm a very, very technical person. I am 90% technical analysis trader. I am a 90% technical analysis trader. So what do I mean by that? What are the 10%? Do I look at news? Sure, I do look at news. I use websites like Forex Factory. I'm sure you guys have used that. Okay, since we are looking at the euro dollar, we can filter it out. None. We can see what kind of news might potentially affect the market. So let's move on. We will filter it out. If you guys didn't know, there's a filter option. We can have the euro dollar since we are looking at that. Okay, today we have quite an important news. Fed Chair Powell was speaking. We have the Spanish unemployment change at 3 p.m. Singapore time earlier or 3 a.m. New York time. Okay, so previously I will look at the data roughly to get the market sentiments for the day. Okay, so previously it was 40.4K, but this time the unemployment change was 17.7. So I also look at the charts. It got better than last month. It's even way better than forecasted too. Forecasted 30.8, we have 17.7. So it is a way better than expected market outcome. Okay, for tonight, we have quite a few orange and red news. So I would personally avoid trading during those timing. So what do I mean by trading to stop trading around those timing? What we have is, let me get a notepad out. What do I mean? Let me check the fonts. Okay, let me get it bigger. What we have is the known unknowns. I like to stress that out. What do I mean by known unknowns? Well, as you can see here, we know that at 9 p.m. later on, or 10 p.m., we have jobs opening. We saw the previous, we saw the forecasts, but do we actually know the actual number that is coming out? Especially most of us are intraday traders. We trade during the day and we close our positions before the end of the day. So we do not want all those news affecting our take profits or stop loss. So knowns, what are knowns? Knowns are the news timing. We know what time the news is coming. The news plus release timing. That's what we know. That's the known. But what are the unknowns? The news outcome. We cannot predict and we do not know the news outcome. So what I can say that it's like gambling. So let's say I already have a trade opening at had a trade open at 9 p.m. but 10 p.m. had some kind of red news, orange news, and 11 p.m. there is a ECB President Lagarde speaks. Well, all this can affect my trade. I do not know the outcome at all. So all this to me are the known unknowns. I focus mainly on technicals. I trade when there are retail news, or I do not trade around the release of news timing. So let's take a look at 3 p.m. just now. 3 p.m. Price shot up due to the better than expected Spanish change in employment. Okay, so how do we implement this? As I was mentioning earlier, we are looking to the right. We actually saw an order block. So we have a reason why price actually went there. So to even add confluence to this, we are talking about smart money concepts now, the liquidity concepts. So let's zoom in. Let's zoom in on the left side. What do we have here? We have what we call equal highs. Equal highs. Okay, so equal highs. What do you mean by equal highs? This is what I mean. Look at these 2 weeks. Look at these 2 weeks. It is equal high. So this area has liquidity. Okay, hello. I think you have raised your hand in the Zoom session. Do let me know if you have a question. Let me know in the chat. I will try my best to answer you. Okay, so we are looking at equal highs. So what I will do is I like to draw a line. Since we have spotted this area, I'll draw a line from here all the way across. Okay, price seems to have already cleared here. Okay, well, what do we have here? So we look higher. Since this area is invalid, has been invalidated, we can look higher. So look at this area. So many wicks. The wicks are just one line. It is kind of an equal high. So if you draw a line across without this box, you notice that price cleared the top liquidity. So with liquidity concepts involved with your trading, you can expect price to clear this kind of areas of equal highs and equal lows. So right now, I'm also looking on the left. I see something more. Price could potentially break these areas. These 3 weeks are sort of an equal high. This area is a potential area that I'm looking for price to reach towards. Let me set that. So I like to set it as I already have my templates. As you can see on the side, I have my BSLQ. Okay, what does BSLQ mean? What does it mean? Let me highlight it out again, this area. Okay, what does BSLQ means? Buy side liquidity. So right now, so this is buy side liquidity where we can expect price to reach towards. If you notice, once liquidity has been taken out, especially this area, price rejected downwards. So you can, if you are scalping on the small time frame, since it is the 1 hour time frame, you can potentially, this is not a signal, you can potentially look for shorts if price reaches here to go downwards for some small scalps on the smaller time frame. Okay. Also, do not, as I mentioned earlier, please do not just focus on your stochastic oscillator for your entry. You do not just sell immediately, since we have already identified a liquidity area here. We can expect, just now what did I say in the PowerPoint? I mentioned that price can continue to stay above the 80 overbought zone for a while. Doesn't mean going up, you can just sell immediately. You have the confluence, so I have my confluence with the buy side liquidity on top. So my confluence tells me it is possible for price to continue staying above the 80 level until it clears this buy side liquidity. Okay, let me clear this up. It's a bit messy. Okay, let's get a clean chart before we have some kind of potential trades, some potential forecasts before the news tonight. Also, I see quite a few of you guys have tuned in to this webinar. Do let me know where you are tuning in from. I am from Singapore. Do let me know in chat where you guys are from. Q&A. Hey, hi. I just saw your question. I do apologize for that. I saw you ask, can you apply to get an opinion on the DXY's structure until the end of this year, if possible? I cannot predict the structure of DXY until the end of the year. As you know, there is the Russian war, the Ukraine-Russian war. There are many things going on with the world, and especially inflation. All these factors affects where DXY might hit to towards the end of the year. What I can do is I can give a possible opinion, my personal opinion on DXY for today. Yeah, for today. Okay, you are from Europe. Hey guys, hey, thank you for tuning in from all the way there. It's actually 5:30 p.m. for me. I'm sure in Europe it might be early lunchtime. I guess it's around 11 p.m. in Europe, 11 a.m. in Europe. Okay, I'll get to the DXY's structure. Ah, yes, it's 11:30 a.m. Nice. It's your lunchtime. Okay, let's move on. Okay, I saw someone also ask if I could show a setup when I enter a trade. Sure, I will show it. I'll show it properly. Okay, let me DXY. Let's look at DXY first before we get back to Euro. Okay, so we were looking at DXY. Okay, DXY is currently on the 1 hour. Okay, let me remove these lines. Okay, on the 1 hour, we are currently in the oversold area. Okay, in the oversold area, so we can possibly, this is not a confirmation, we can possibly expect DXY for today to continue heading upwards. It's possible since the stochastic oscillator is in the oversold area. So if DXY goes up, euro dollar might go for a sell. Okay, so what I like to do normally, let me get a clean chart state. I like to do top-down analysis for every single pair, with including DXY. So let's head to the monthly first. Let's head to the monthly. We are currently now on the DXY monthly chart. As I mentioned in the past few webinars, I always like to draw the monthly highs. I'll do a quick one today, and the monthly lows. Okay, how do I get the thing to stick to the wicks? Well, there is the magnet tool. You can use that. And I already have my templates ready. So why am I marking all these area out? Monthly high, monthly lows. A quick explanation would be that these areas act as a very strong area of support and resistance. So let me move on to the weekly. We will mark out the previous weekly low, and the previous weekly high. Where is it? Okay. Moving on, we will go to the daily. We get the previous daily low. So we can see price has already broken past the previous daily low. You have the daily high. Okay, what area is this at? So since we saw, I like to establish a chart movement, a story, a backstory behind what is going on with the chart. So let me draw up. So we have this possible block. We have this block. Let me change it to a green block. So previously, price, I like to have a story. Price went down, tapped in, went back up, reaction from that block before it continued heading downwards. So since price has already broken the daily low and the weekly low, it's possible that we can actually expect DXY to continue being bearish. But where might price potentially head to? This is what I like to do now. I like to draw out the market imbalance. So what do I mean by market imbalance? Can you look at this area? You see this area? Price has not went down and cleared this area previously. So these areas act as market imbalance. So let me mark it out. I can expect, okay, I'll be using a Fibonacci Fib retracement. This is my personal template. I pull it from the bottom of this to there and extend it. So it's possible that I can expect DXY to continue downwards towards this tiny market imbalance area. As you can see from the Stochastic Oscillator, price went down, the oscillator was at the overbought area and it went down too. Okay, so since we are expecting price to go down, we can actually expect the euro dollar or the Aussie dollar to turn into a long. So we are on the daily. Since we have already established the market imbalance, let us go to the 4-hour charts. As you can see, price is slowly reaching down. Slowly reaching down into the market imbalance. Okay, this will be my bias for DXY. A bearish bias for DXY for maybe today or tomorrow. Okay, let's move on. Let's move back to euro dollar. Okay, let me show you an example trade that I will personally take. Today I'm very busy doing all kinds of research for the company, so I do not have time to actually do a personal live trade today. Okay, since just now I mentioned that I expected price to head up to clear the liquidity, let us go on a smaller time frame on the 1 hour. Okay, what I like to do is I like to check the overall structure. Okay, I haven't marked out the monthly highs and lows first. It's very important. Let me do a quick one. Monthly low, weekly. Okay, let me get this out the way. Okay. weekly high. Okay, it has already broken past the previous weekly high. Let me go to the daily. I'll mark out the previous daily high. Okay, price has already broken the previous daily high and the daily low. Okay, now we have something. I want you guys to kind of guess, what am I looking at? Where am I aiming for? Market imbalance. Can you guys spot it on the charts? This is on the daily charts. This is on the daily charts. Market imbalance. You are right. But where is it? Where is it located? Here. You can see market imbalance, it's here. This is in line with the buy side liquidity that I drew out earlier. So let me do a very nice one. We can expect price to head up towards this area to clear the daily market imbalance. So let's go down to the 4 hours. So I'm actually expecting euro dollar to hit the daily market imbalance, which is also in line with the 4 hours equal highs. So we have the buy side liquidity there. So this is the two confluence. And also the third confluence is price has broken past the daily high. And if you look carefully right now on the 4 hour charts, price just reflected off the weekly high. This is the very, very big reason why I always emphasize you guys to mark out the monthly high, monthly lows, weekly high, weekly lows, and daily highs and daily lows. See, it automatically, it is acting as a form of support right now. Okay, so how would I enter a trade? Just now somebody asked, could you show your setup when you enter a trade? Okay, let me show you. Since I got this structure out, okay, let's just give an example that maybe I would like to buy. Let's say I want to catch a pullback buy to the top. I'll go to the 1 hour charts. I'll see what's going on. And then what I like to implement right now, it's very, very technical. It's called Wyckoff. If you guys have heard about it, I personally use Wyckoff in line with smart money concepts for my trades. So how do I do that? What is Wyckoff? So judging by this area, since the market is on an uptrend and there is a breakout even higher, to me, this area is an, let me write it out, accumulation area, reaccumulation. Okay. Reaccumulation area, so we can expect price to continue going up. This acts as another confluence to why I believe price can continue heading up. Okay, so let's continue looking on the 1 hour. Let me draw. Okay, what I like to see also, it's clean market movement. So what do I mean by clean market movement? I like to see area of imbalances clear as the market move higher. I like to see price come down, a nice clean movement upwards. I do not like to see when the chart goes up and suddenly it just smash up. When the moment I see this kind of scenario, I'm off the charts. There's nothing for me to take. Price can either continue moving all the way up, or since price can go up so fast, I can expect price to come down fast too. Okay, let's see. What do I mean by clean market movement? Look at this. There's a nice imbalance. Okay, let me change this chart template. The color is a bit glaring. Okay, the background, let me set it as light gray. Okay, so previously you can see this area. Price did not come back in, but price went back down and create this nice market imbalance. So I'll mark this area as blue. You can see it nicely. Price came in, we create the market imbalance before price further headed upwards. And this is also in line with the Stochastic Oscillator. Okay, since price is moving upwards, this is how I personally would trade. I'd like to see, but why did price come back down? Why did price come back down? Why did price come back down here? When there is no market imbalance. There's no market imbalance here, but why did price come down? Same thing. I implement smart money concepts, liquidity. So what I just spotted, it's equal lows. Look at this area. All these areas are equal lows. So price came down just to take out liquidity. I'll mark this out as sell side liquidity. Sell side liquidity has been taken due to these wicks. They are of equal lows. Let me type it out. Equal lows. And what does SSLQ mean? SSLQ means equal lows and sell side liquidity. So since price came down to take this area, continues moving up. But right now, I do apologize for that. Okay. Let me go down to the lower time frame since I have already established that price is moving higher. Okay, so let's say I want to catch this entry. We just saw price cleared the imbalance area. It just tapped in, it just cleared it in line with the weekly high. But why? Why did I not enter here? Why did I not enter here? Although there is a weekly high. Why? Because on the hourly, I see this area. Potentially, price might just come here and bounce all the way up, or price might come down and clear these equal lows before heading up. I do not know that. So right now, my probability of a better trade is to just wait for price to come up here all the way up to this daily imbalance zone and also clear the buy side liquidity before I start looking for a short downwards. It's better to wait now, right, than to catch the long. Right now, if you actually start to long, we are already late. We are already late on the train. Price has already went up all the way up since 3rd of October yesterday. Entering here, we are actually buying on the high side. And also, why not to take the trade? Look at this on the Stochastic Oscillator. Price is currently in the overbought area, so it is not a wise choice to just buy and hope for the best for price to continue heading upwards. Okay, let's move on to the 30 minutes chart. Let me clean this up. Look, it's very nice. Sell side liquidity taken before price continue moving upwards. Okay, so let's get on to how I would enter a trade. How would I enter a trade? So I normally after I look at all these factors in play. So potentially this area. Okay, and hourly. What I like to draw is a breaker block. breaker block. After price moves up, this is smart money concepts. Price goes down, moves up. But where do I draw the breaker block? Where is it? Why did price come back down here? It's actually a very, very unique way of seeing things. A breaker block, it's over here. Okay, which candle? Which candle is the breaker block? You look carefully. It's here. This is on the hourly. What I'm doing now is to find a point of interest. A point of interest where I can either buy or sell. So let's say I was looking to long. I was looking to catch the movement upwards. So I start to mark out the breaker block. The breaker block. Okay, look nicely. Price just tapped in nicely. But we want more confluence. What we want is confluence. You cannot just rely on, yes, oh, there's a breaker block. I can just, you know, I can just buy, you know, just buy and hope for the best to the top. No, what we want is confluence. So the first confluence is price is at the oversold area right here, oversold on the oscillator with the breaker block. Also, there is market imbalance to add confluence to it. So what you want is many, many confirmations, not only on indicators. I personally do not use any indicators when I'm trading. I usually trade on a naked chart without the use of indicators. Okay, since we have the breaker block right here, also there is a market imbalance on the 1 hour chart that got cleared. Where is it? It's here. Let me change it to the normal one. You can see. Price came in nicely to clear this imbalance. Price came in line with the breaker block and the stochastic. So now we have three different confluences. So now let us draw one more thing. We can use the Fibonacci. The Fibonacci, I'm sure many of you guys have used it. So we can get the Fibonacci from the bottom to the top. Let me change all fibs. So what we are looking at, let me draw what we are looking at. Price tapped on the 50% Fibonacci area to the 50%. Using smart money concepts, any price, any buy price below. Okay, let me draw it. Any buy price below this 50% area and below is a discounted pricing. How do you decide when to open a position? Yes, I'll get to that. I'll zoom in smaller. Right now, we are on the hourly time frame. Right now, I'm looking at this area. I'm eyeing it hard. So how do I open? Since I already have all these confirmations, I already have 4 different confirmations. The 50%, breaker block, oscillator, and this imbalance. Okay, let's move in closer. So I will leave this in the 50%. Zooming in, let's go to a 30 minutes. Okay, we have nothing here. Normally, I am on the 5 minutes chart. 5 minutes chart. Okay, we have actually a very, very bad market movement here that is not a good example at all. Why is it not a good example? Because price went down. Look at this week. Look at this week. Okay, maybe on the 15 minutes. Okay, what I like to see is break of market structure. I'll use this arrow. Break of market structure. BMS. BMS means break of market structure. So normally on the 15 minutes, if you are just using only smart money concepts without the use of Wyckoff, we have the break of structure, break of market structure on the M15. After the M15, price went up, went down, it went movement a while before it went back up. So what is this area? Another break in market structure. So I like to mark it out nicely. So I draw a line, a break of market structure. This is not a good example, mainly because there is the equal lows there. Liquidity. Price could come back down to clear liquidity. So let us continue. Where I will be looking at for a long. Where would I be looking at? So what I like to do is I find area of imbalance for my entry. So I usually find the first entry, fair value gap, extended. You can see this is on the M15 chart. Price tapped in. I would have entered there. This is just smart. This is just on smart money concepts. But if I implement Wyckoff, I can get a better entry. So my stop loss is usually below the last area that caused the break of market structure, the last area that caused it. So my stop loss is usually below. So after I enter, let's just say that I was aiming to the top. Let's just say that. But if you look carefully, price actually came down and took out my stop loss. But if you manage your trade well, the moment it has a second break of market structure, what I would do is I will look carefully on the M15. What do you call this? What kind of candle close is this? It's a very, very weak close. So I will label this area out immediately. So price came down, tapped my entry here, and went back up. But this kind of close, I would call it a break on market structure, but it's weak. Weak, very weak. What I want is the candle to close above. What do you mean by a strong break in market structure? It looks something like this. What I want to see is the body of the candle above the previous high, not just the wick alone. So the moment I see a very weak, WEAK, weak break of market structure, I would already set my trade to break even immediately. Break even on weak BMS. Immediately break even. So even if price decides, okay, this is on the M15 charts, so 30 minutes later, after this, 30 minutes later, price will come down and hit my break even. To me, it is better to break even on my trades than to hit the stop loss. So this is a very, very bad example. It's a bad example. So let's move on next. Why price came down here? Okay, let us establish why price came down there. There must be a reason. 2 hours, there's nothing. 30 minutes. M15 charts, 5 minutes. Let me take a look. Here on the 1 minute. I'm usually also on the 1 minute chart if I'm looking for an entry. Okay, let's look. Price hit here 0.97529. Okay, what do we have here? What do we have here? This area is the last, it's the very, very last market imbalance. Let me extend it out. Take a look. This is on the 1 minute chart. 1 minute market imbalance. Price did not. What do we call this if price nearly come down to tap? We call this a market inducement. What is a market inducement? Price nearly tapped, but went back up. So we can expect price to continue coming back down. Okay, I just saw somebody ask a question. You want to lean in on this week's slowdown of DXY up movement, but inflation is strong, so DXY movement will continue right. As I mentioned, I am a 90% technical trader. I do not read up on the news about all this. I usually try to avoid the news and I focus on the technical side of trading. So I'll draw lines and all this. Okay, lines and all this. Okay, can you share a quick intro of how to create the very good template like yours? Okay, I think the computer has hanged. Okay, give me a moment. I think the computer has hanged. Okay, what's going on? Okay. For boxes, you can save it. Let's say the style for boxes extended, the style is extend right. So you can save it, save as. You can save it as extended box green. So you can take a screenshot of my rectangle boxes, how I draw it. So we have a box blue, green, red, extended box blue, green, red. Do screenshot this down before we continue. So let's move on. Since price has tapped into this market inducement area, this 1 minute market imbalance, let's look to the right. Price has tapped in and inducement tapped in, went up. Let's check the 15 minutes. Okay, how would I have entered here? Another possible entry. I will not get into Wyckoff today because we do not have enough time. Okay, what I like to do is, again, same thing, shift. Okay, I think I used the wrong arrow. So how do I get a straight line like this? How do I get a very straight line? I hold the shift key, you can see? I hold the shift key, it immediately becomes straight. So you can right click, click on market structure, top. What I like to do is one more time, break off market structure on the top side. Okay, you can't really see it, but price has went up, broken this area. But the huge problem is I would not have entered, mainly because this is also a weak break in market structure. What we want is the body to close up like this. So let me look back at old data where we can find a nicer trade that I would have entered. Okay, it looks good. This looks good. Okay, so I always wait for 2 break in market structure with a point of interest. So what I do is first find points of interest. Must have multiple confluences. B, whether it's in an accumulation or distribution market. So if the market is distributing, going downwards, I do not look for a buy. Else, if I expect price has oversold, like looking at the Stochastic Oscillator, I will be only looking for a buy. So let's say I found a point of interest. I will draw the break of market structure. This is a very small one. This is on the M15, break of market structure. Price goes down. Price failed to create a lower low. So this is a higher low, what we call a higher low. So we have a higher low here. And then next, we move up. another break in market structure. So the moment the market structure has broken, a very, very nice body break in market structure, I would immediately look for the first market imbalance. So the first market imbalance, it's here. You can take a look. Green. Look, it cleared, it tapped in. So my entry would have been immediately at here, all the way down to the previous break in market structure. So as usual, aim for the liquidity areas. Where are we looking at liquidity? Liquidity, 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 liquidity. So we can expect price to break out across this entire area. So looking at the trade, if we took it, it would have been a 1 to 2.9 risk to reward ratio. And look at the clean market movements. We have the market imbalance on the 15 minutes cleared nicely. Okay, this is not extended, box blue. So you can see price came down, cleared the small market imbalance. So my trading strategy is pretty easy. It's pretty easy to understand. I wait for 2 break in market structure before I enter. Okay, let me type out again. Wait for 2 EMS on the M15 charts. Enter on the first market imbalance area. Stop loss below the RAS BMS area. You can also do a better entry. You can go to the 5 minutes, 1 minute, but what I like to do if there is a 15 minutes market imbalance, I enter just on that solely. So if there isn't, I will go down to the 5 minutes, 1 minute, I will find the next area of market imbalance. How do you recognize liquidity? Yes, it's by wicks. Yes. Also, over time, you can actually search Google. There is Smart Money Concepts free tutorials on YouTube. You can read up on why this is engineered liquidity. They will explain it more in detail on YouTube. So you can also identify liquidity by equal highs and equal lows. Equal highs and equal lows. Okay, I will give you guys this as, a research homework that you guys can do. Read up on liquidity, read up on smart money concepts. Homework. I will give you guys this as a homework. Okay, you guys do read up on this, as I will be presenting quite a few more times in the future, and I will mainly be using on smart money concepts and liquidity and Wyckoff. Okay, I'll just write it out. Wyckoff 2. Accumulation, distribution. Okay, this is your homework because I would be presenting on Vantage pretty often in the future. So I would be mainly talking about all this. I do hope this will help you increase your probability of a good trade. Do screenshot this, take your time. If you are free, do watch videos on it, read up, learn something new. I'm sorry, can you say again what is BMS? BMS is break of market structure. It's just a short form, break of market structure, BMS. Okay, do screenshot this, and we have overshot the timing for the webinar. I do hope you guys have learned a lot from me today. I do hope to share more of my knowledge with you guys in the future. And thank you for joining me today. My name is Chen Yongjing, and I hope you guys have a good day. Goodbye, guys. Thank you for joining.